All right, welcome to the Explainer. We've got a fascinating source to break down for you today, one that ties together three pretty massive topics: the sinking value of the US dollar, a huge decision from the Federal Reserve, and a really stunning accusation that links the two.
So, the source we're looking at today kicks things off with this one single number. According to the author, that's how much the US dollar has dropped in value against other big currencies. And get this, in just the first 9 months of this year. That's a huge drop, and it really sets the stage for everything else we're going to talk about.
Now you might be thinking, okay, so what? I'm not a currency trader. But the author here says, hold on, this is something that should be your number one concern. They frame it as a hidden tax that's quietly chipping away at the value of every single dollar in your bank account. Let's really dig into what that means.
All right, so what exactly is this hidden tax they're talking about? Well, this is the part where, according to the source, that big abstract number we just saw starts to hit you right where it hurts, your wallet.
Okay, so here's the bottom line. It's not that the number of dollars in your bank account has changed. It's what those dollars can buy. The author's point is pretty simple. A weaker dollar means everything we import gets more expensive. We're talking gas, food, electronics, you name it. Your savings haven't technically shrunk, but their power to buy things definitely has.
So, you gotta ask, what's causing this? Why is the dollar's value dropping? Well, this source points the finger squarely at one thing: the Federal Reserve's big weapon, interest rate cuts. Let's break down how this analysis says that works.
Yeah, the author really boils this down to basic economics, supply and demand. Think about it. When the Fed cuts rates, holding onto US dollars becomes way less appealing for big international investors. So what do? They sell. That's demand going down. At the exact same time, lower rates make it cheaper to borrow money, so the supply of dollars goes up. You see where this is going, right? Lower demand plus higher supply equals a weaker currency.
And this is where it gets kind of wild. The author lays out what they call a vicious cycle. The Fed cuts rates to boost the economy, right? But that makes the dollar weaker. A weaker dollar means imports cost more, which leads to inflation. And when regular people are getting squeezed by rising prices, what happens? There's a ton of pressure on the Fed to, you guessed it, cut rates again. And boom, you're right back at the start of the spiral.
Okay, take a breath, because this is where the analysis takes a sharp turn. We're moving away from the big picture economics and diving headfirst into a really explosive, very specific accusation the author makes.
Now, before we even get to the accusation, you have to understand where the author is coming from on crypto. And let me tell you, they do not hold back. They argue it's not a real asset class, but a speculative bubble, where the only way to make money is to sell to someone else for a higher price.
And check out how they frame this. It's a really stark comparison they're making to build their case. On one side, you have what they call real assets, stocks, bonds, things that actually produce something, that generate cash. Then, on the other side, they put crypto. And in their view, it generates nothing. Its value is based entirely on market hype and finding that next person to buy in.
And here it is. This is the core allegation from the source. It's a huge claim, so it's important to be clear. This is the author's theory. They're alleging that the president has a personal financial incentive to want a weak dollar, claiming a huge chunk of his net worth is tied up in cryptocurrencies. The logic they present is that since crypto is priced in dollars, a falling dollar makes the value of that crypto go up. So, to back this up, the author points to the Trump meme coin as like Exhibit A. And they lay out these numbers, from the launch price to the peak and where it is now. And look at that last bullet point. Hundreds of thousands of investors are underwater. Based on all this, the author's interpretation is that it's a classic insider pump and dump.
And this chart really drives the point home, visually. That 80-20 split between who the source calls insiders and the public, well, in the author's eyes, that's not just a detail, it's a massive red flag.
So, this is the big finale of their argument, right here in this chart. They're creating this incredible contrast to make their point. On the left, you've got this enormous bar representing what they claim is trillions in lost purchasing power for Americans. And then on the right, this tiny little sliver representing the alleged personal gain. The visual is designed to shout that the collective pain is just orders of magnitude greater than any supposed individual benefit.
Okay, so with all of that as the backdrop, the economics, the accusations, we finally get to the main event of the day, the Fed's actual decision on interest rates. But here's the thing. According to the source, the rate cut itself, that was a total sideshow. Everybody saw that coming.
The real story, they argue, was in the fine print. What the Fed's projections and what Chairman Jerome Powell said afterward would signal about the future.
And get this, the source we're looking at actually had this Fed Day playbook ready to go before the announcement. It laid out all the possibilities. And what actually happened? The base case, exactly as predicted. A cut, a dovish tone, which, in the author's view, just puts more gas on that dollar decline fire we talked about earlier.
All right, so we've gone through the economic theory, we've covered the wild allegations. What's the bottom line? Why does any of this matter to you? What's the big takeaway from all this?
It really all boils down to this one idea the author puts forward, the dollar destruction dividend. Their conclusion is that these policies, intentionally or not, create a two-tiered system. If you own assets, your wealth goes up in dollar terms. But if you're someone who just saves and earns in dollars, well, you're the one paying for it through that hidden tax of lost purchasing power.
And that brings us to the final thought from this source, and it's a powerful one. They're telling us to stop focusing on the headline of the day because that was just a sideshow. The real story, they insist, is this quiet, ongoing devaluation of the dollar. And it kind of leaves you thinking, what does that really mean for our future?